Good morning, everybody. It's Thursday, December 19th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here at March corn unchanged at 437 and a quarter. March soybeans were up 4 3/4 at 958, and March Chicago wheat was down 6 1/4 at 535. This morning, we had an export sales announcement of 227,200 metric tons of soybeans to unknown. Of that balance, 152,200 was for 24 and 75,000 was for 25. This morning's export sales report, really nothing special, in line with the estimates. Corn was 1,174,600. Soybeans, 1,424,200. And wheat was 457,900. That was kind of the upper end of the range. Meal was in the middle, 261,600. We had yesterday afternoon rate cut, quarter point, sent the outside markets pretty crazy. The Dow down over 1,000 points at one point. Dustin, maybe a few thoughts here as we kick off the morning, and then we'll throw it around the room.
Yeah, Dan, thanks. It was, the rate cut was as expected, quarter point, but the guidance was more hawkish. Kind of like we talked about yesterday morning. The Fed really needs to be careful not to overdo, a loose monetary policy. And by all accounts, you go back through history, these rates they feel high, but they're actually relatively neutral, right? Do we need to go right back down to a zero interest rate policy again because we got addicted to it for the last decade? That's the question. A little bit more hawkish, and stock markets went berserk. Bitcoin fell sharply. Gold fell sharply. The dollar is already quite strong against these other currencies as we keep kind of harping on and talking on. And that definitely pushed the euro lower against the dollar. It definitely helped push the Brazilian real to new lows. We fell below 16. But, as Justin mentioned this morning before we started talking, I think everyone's starting to kind of realize how important the real is. It's getting more mainstream. So at some point, it will have a, some sort of law of diminishing return effect, we believe, where it can only get so cheap before it's going to stop impacting us. A lot of our corn demand, for example, is domestic. At some point you can't push corn to zero just because the Brazilians are able to sell it cheaper. We still have a lot of domestic use, so we have to support
it. And Justin, you think a lot of yesterday's move. I mean, people waking up this morning still reeling on the fact that beans were down 25 cents or thereabouts yesterday, breached some pretty good technical levels and just they went after it. I mean, what's your thoughts there?
Yeah, we kind of tried to bounce and carve out a low since August, really. And took all those lows out, right? At the same time, real collapsing, weather good in South America. So, I mean, the fundamentals don't support a rally, really. But I think it's being exacerbated by some of these outside influences as well. So you really got nothing in the camp of soybeans except for at some point you factor in a lot of bearish stuff and make a bottom. But where that is that's a tough game. I do think big picture, if you look at, the value of 950 beans with the money supply out there and what assets have done and everything else has done, looks pretty inexpensive. I mean, we're back to prices that we were seeing, 08, 09 after, the giant recession that we had, and we proved that those were big value areas. So, certainly can go lower. You certainly could go to $8. I don't believe that, but I think we're certainly trying to find out what that number is. We do have a big South American crop. Like Ben said, it's not done yet, but right now we're trading a really big crop. I'm sure the Brazilians are trading a big crop, and their currency that's gone down. They've still gotten relatively good prices with a big crop. So. We're chewing through all that, not to be a Captain Obvious. We just have to see when it's done going down. We're not doing a ton of export business. We're doing enough to maybe sustain stuff here in beans. But the worry is that as we get closer to January, end of January, we're cutting beans down in South America. So our export window is just collapsing very rapidly. So that's the hard part.
Yeah. Ben, what's on your mind this morning?
I concur with Justin. Just to add to that, the narrative of bearish beans has been prevalent since we kind of put a mark on how many acres they were going to plant in South America. So we've traded this. We've continued to trade it. We were in a consolidation mode for 2 months, and the currency thing pushed us lower. We took out the Nov lows yesterday, and I think that kind of becomes a key place. You have January option expiration on a holiday week. I just counted up from 1080 down to here. There's 75,000 Jan bean puts that would be in the money. Now, obviously, that's not 75,000 shorts, but those are certainly options that have to be dealt with. And then on the 940 line is the largest open interest strike there is in puts at 17,000. So I think that beans might be a little bit of a volatile trade here over the next 6-7 days, because there's a lot of stuff that has to be cleaned up. And like Justin's point, there's probably not a great reason to rally it, but the narrative is out there. We've traded all of these things, all these knowns. And at some point, selling beans is not going to be a free money trade. They're going to punish, and it'll be quick, and then it'll be over, and you'll probably short them again. But a lot of options that have to be reconciled in Jan, and it's a lot more than I thought, quite frankly, because the Jan is not really kind of a super heavily traded contract like some of the other ones. So kind of
yeah, I will say that too. Just talking about bearish fundamentals, and Dustin talked about it too. I'd say a week ago, maybe there's a couple people really talking about the Brazilian real, and I think yesterday it was like 5,000 people. That's what it felt like. I mean, Bloomberg, mainstream TV to
all kinds of charts on social media.
A lot of currency experts popped out of nowhere. So those are good signs that you're getting close.
It's like when the old taxi drivers used to ask what your opinion was on corn, right?
Yeah, I heard corn's in a bull market this year. Like, oh, geez.
All right.
I'd also say that part of the narrative here is we look at beans, and is a lot of the pressure coming from South American selling. And Dustin's done a great job of explaining in the newsletter that the South American farmer hasn't really lost on beans because of the currency adjustment, right? So are they hedging? And does that, if we do run into something in the next couple of months, does that get to be more fuel for the fire, right? And I don't think you know that until you have that moment where you kind of have to push it against the shorts and see who wants to stay or not.
Yeah, and I would add too, because a lot of people say, well, what's going to stop it, right? What's going to stop it from falling? And it is kind of like we're not trading beans, we're trading the real. Like that's what it's felt like for the last couple months, really. Since October, we've dropped 10% in the real, we've dropped 10% in beans, really since that day. I thought Bloomberg had some good videos out yesterday on it, just kind of explaining that the last time Lula was president, he kind of paid attention to the market a bit more and stepped in as needed. And right now the market is telling Brazil that there's a problem. Like there's no confidence in the current austerity measures matched with tax cuts for the poor. It's like they're not really serious about bringing their fiscal woes under control. But that, one thing that was mentioned though is that he has done this in the past. Like he has eventually kind of, paid attention to the market saying and reverse. So perhaps, like to Justin's point, is getting this much attention. Perhaps Brazilian leadership changes course. There's a lot of things that can still change. So I don't want to just say that this is just going to be the narrative going forward. There's still time for them to go and make more like austerity measures, for example.
Yeah, that reminds me of Argentina. I think I talked about this a while ago on the show, where we just got way ahead of these policy changes that were going to happen, and when they happen, we were going to release 20 million tons of beans on the market immediately, and we tanked going into it, and then it happened, and then that was it. Market rallied from then on out, like it had been priced in, and it ended up they didn't sell 20 million tons immediately on the market. They had already sold it through the black market. It wasn't just this big stockpile. So those are really hard. You think about how hard it is with trying to trade, the USDA numbers, let alone, foreign policy. So, and when it's affecting our market. So you just gotta be careful.
And Macri only had 4 years to turn that ship, and really nothing really changed during his term. Under the new administration, though, like they're actually doing something. So that's interesting to see. Like Argentina is going kind of righting the ship where Brazil's going downhill. So kind of a flip universe from where we were.
Yeah, like tag team. Yeah.
Well, it'd be interesting too, guys, that next 36 or 40 hours, whatever it is, with this stopgap funding bill, overnight, more and more traction for them to dig in and not pass it with all the pork, so it'll be interesting to see how markets react to, a possible partial shutdown, or if they're, how they're going to alter the bill in any way.
Well, stocks are up right now, rebounding from yesterday's massive sell-off. So, it'd be interesting to see what the day session does. But yeah, good point, Dan. I mean, is this bullish or bearish for the stock market? I don't know.
Yeah, not sure. It'll be interesting. But I tell you what, that washout yesterday afternoon was pretty quick and violent. Just kind of sprung up and hit it. Ryland, a couple minutes before we come into the open here, we're going to have cattle on feed out tomorrow, 2:00 Central. Softer cattle trade yesterday, and then they're calling for a lower hog opening on the heels of what we saw yesterday afternoon in the stock market. What are your thoughts here?
Yeah, no, let's, still waiting for the Southern cash market to really start to develop. It looked like 191 bid on the FCE and 192 ask. So I think just overall, maybe the sentiment's starting to shift a little bit in the South, but in the North, we did see a little bit of trade, dress trade at 304 to 305 in Nebraska and 303 to 305 in Iowa. So, I mean, this is still, firmer trade from the previous week. So it seems like that's going to be a little bit of a premium in the North versus the South, but we'll see how it kind of shapes up. Packers just don't seem to be as aggressive as they've been this week. So I do think we've seen the reflection of that in futures. We saw some liquidation yesterday. February fell right back down to the 50-day moving average and held support. So I think that's going to be a big number to watch right now, just as far as directional momentum. But beef prices were also just a little bit easier. So it seems like you're getting a little bit of a turn on the fundamental side, but we'll see how cash shapes up and if there's any big surprise on the on-feed report. So on feed, we're looking for 100% placements at 96 and marketing's around 98. So I think those are the market, what the market's going to price in for right now. And yeah, I think overall, just in the hog complex, did see cash start to stabilize. Carcass was up. Futures just seemed to consolidate here, and it just seems like there's going to be all eyes on cash right now to see if we can kind of hold up into the end of the year. Plus, yeah, with the U.S. dollar kind of doing what it's doing, and we know that Mexico's been on a buying spree lately, it does seem that could bleed into the market here today. But we'll see. Overall, it just kind of feels like hog market's waiting for some more information here, or something new to trade. But funds are massively long. It feels like a big risk with what's coming down the road if there are going to be big tariffs here in January. So, just as we've been saying, it just feels like, any second now the bottom could kind of fall out, so you just want to be protected. But there is still good news. Obviously we haven't seen the big fundamental turn at this point.
Very good. Appreciate the update there. A couple things to point out. Tomorrow's Friday. We'll have Fun Fact Friday. It's everybody's favorite time of the week. Brian will be in for that. And then Jack will be back hosting tomorrow. So I'll be out for meetings, and Jack will be right in the ship. So tune in for that, because you never know what you're going to get with Jack when he's hosting. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and a subscribe. It'll keep you up to speed on everything AgYield, all the special webinars we put out, and certainly the other content. So thanks again to everybody that supports the show. We're doing this live every day that the markets are open, streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good conversation. We'll give one last rundown of the markets here as we open. March corn down a quarter at 437. March soybeans are up 4 at 957. And March Chicago wheat's down 8 1/4 at 533. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.